2024 was a wild ride for the stock market with the S&P 500 up more than 23%. But what's next for 2025? With excitement around AI stocks and possible interest rate cuts, things look bright. But Warren Buffett just sold $127 billion in stocks and is sitting on a massive cash pile. What does that mean for us? Let's dive into Buffett's timeless advice and how this applies to investing in 2025. Warren Buffett's famous quote from 1986 remains just as relevant today. Be fearful when others are greedy and greedy when others are fearful. This mindset is a cornerstone of Buffett's success. It means finding opportunities when markets are in panic and showing restraint when others are chasing quick gains. Buy low, sell high. It's that simple. When markets soar, it's tempting to follow the crowd, but real opportunities arise when fear drives prices down. Buffett's success comes from recognizing and acting on these moments. So how do we apply this? Well, when markets dip, and they always do, don't panic. Instead, assess if the company's fundamentals, revenue, earnings, and growth remain strong. Market drops affect even strong companies, creating chances to buy quality stocks at lower prices. Skip the hype. Hot sectors like AI in 2024 can send stock prices soaring in short time. But as valuations climb, investors should approach with increased caution. Buffett's approach is simple. Avoid the frenzy. Rapid stock run-ups often lead to inflated valuations with future growth already priced in. Now is the time to review your portfolio carefully and be highly selective when deciding which stocks to buy in 2025. Number 2, blend index funds with individual stocks for growth. Buffett loves index funds, and he recommends most people invest the majority of their money into an S&P 500 fund. But his billions, they're from smart individual stock picks. Here's how to balance both. Index funds give you broad exposure with low risk, perfect for most investors. Investing in an S&P 500 index fund provides instant diversification across America's top companies. Dollar cost averaging into these investments, no matter what the market conditions are doing, whether the market is up or down, is a proven strategy. Investing in individual stocks, this is where potential for massive market-beating gains lie. If you're willing to put in the work and spot great companies while they're still undervalued. But remember, investing in individual stocks isn't without risk. Picking the wrong company can lead to losses, which is why selectivity is key. Look for strong financials, a unique competitive edge, and consistent growth potential. In short, know exactly what you're buying. For 2025, Buffett is cautious, but he still believes in American business. Use index funds for stable growth, but don't ignore individual stocks with solid fundamentals, even in a hot AI market. Number 3, own your mistakes and move forward. Even Buffett misses. What sets him apart? He admits it and learns fast. The lesson here is that you will make mistakes. All investors do. The key is learning, adjusting, and not repeating these mistakes. Buffett passed on Amazon early, which he considered a huge mistake. He then bought in 2019 and it's been a winner since. Mistakes happen. The smart investor learns and moves on. Review your portfolio regularly. Check your wins and losses and evaluate what worked and what didn't. Cut your losses. If an investment flops due to bad judgment, don't cling to it. Get out of that investment and move on. These new chances missed out before. If the fundamentals are still strong, it's not too late. I learned this one the hard way. Let me share a personal story that perfectly illustrates this. I was a Palantir believer before it was cool, back when most people were still skeptical. In early 2023, I owned over 400 shares with a cost basis under $10. My plan was to hold them long term, but life threw me a curveball. I got sick, panicked, and ended up selling off my entire portfolio. Thankfully, I recovered and started rebuilding my positions. But here's the kicker. I didn't buy back into Palantir. By then, the stock had already started climbing, and even though I knew the rally was just getting started, I couldn't bring myself to repurchase shares at 3 times my original cost. Fast forward to today, and as you probably know, Palantir hasn't just climbed, it's skyrocketed. For 2025, there are still some amazing opportunities out there. Recognizing potential, even after missing early gains, can still deliver big returns. Don't let past misses stop you from jumping on strong opportunities. Number 4, keep cash ready for big opportunities. Buffett's $325 billion cash stash isn't just for show, it's a weapon. Cash means flexibility. When markets tank, you're ready to pounce without selling other assets in a panic. Here's how to put that strategy into action. Keep some cash liquid in a money market account or short-term bonds. Be patient, don't rush. Wait for prime opportunities when the quality stocks dip. Strike fast. When the market hands you a deal, jump in with confidence. For 2025, with markets peaking, Buffett's cash position signals he's bracing for correction. Make sure you have some cash ready to buy when opportunities arise. Cash isn't idle, it's your ticket to the next big opportunity. Number 5, focus on value, not price. Buffett doesn't care about price tags. He cares about value. Price is just a number. Value is what you get. Find undervalued gems and you'll win big over time. How do you do this? Dig into fundamentals. Look at earnings, revenue, and free cash flow. Compare value versus price. If a stock's trading below its true worth, it's a buy. Avoid the hype. Just because a stock is trending doesn't mean it's valuable. Do your homework to find out. Chase value, not price, and you'll build a winning portfolio. As we moved into 2025, the S&P 500's CAPE ratio, which is the cyclically adjusted price-to-earnings ratio, is at elevated levels. This metric compares stock prices to average earnings over the past 10 years, adjusted for inflation. A high CAPE suggests the market may be overvalued, signaling potential risk. Stay cautious and prioritize companies with strong fundamentals that are trading below their intrinsic value. Buffett's stock sell-off might seem like a red flag, but his strategies are timeless. Whether the market booms or corrects, these principles will guide you to long-term success. The quick takeaways from this video are: be patient and opportunistic, focus on value, not hype, keep cash for future opportunities, and mix index funds with smart stock picks. Investing is simple but not easy. Stick to the basics, stay informed, and play the long game, just like Warren Buffett. If you want to check out a few stocks I'm buying in 2025, check out this video right here. Take care. I'll see you next time.